10-year note yields close out the week at 390. That's down about a basis point on the day, down 3 basis points on the week, and the close below 4% marks the fourth time we've done that in 2024. The first one coming in January, the last three coming over the last 3 Fridays. So obviously things have been shifting around. Going back over the last couple of weeks, we've seen about a 40 basis point range in 10-year note yields from 366 to north of 4%. But again, seeing things moderate, we are closing out today at 390. Ahead in the past this week, we had some major inflation data, which helped cue potential Fed rate cuts coming up, could start as soon as next month. But likewise, the market always looking forward has a lot going on next week. We'll talk about that in a moment. But 10-year note yields this week closing out at 390, down a basis point on the day, and again, down 3 on the week. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. And since that spike higher a week ago Monday, back on August 5th, things have been settling down. We've seen volatility nudging lower each session as the market has gotten its sea legs back under it. Some of that fear has come out of the market. Well, today we saw volatility holding near unchanged, but lower on the week. So that trend has continued. Lastly, let's talk about what we do have next week. Next week, we have a couple of items. We'll have the July FOMC minutes, so we'll get a look under the hood at what the Fed was talking about at their last FOMC meeting. We'll also get a 20-year and a 30-year TIPS auction. And then the highlight of next week will be the Jackson Hole Symposium with Fed Chair Powell speaking on Friday morning. So another busy week. We saw inflation data. We saw yields moving higher and lower. End up the week at 390, down about 3 basis points on the week. Ahead of next week's July FOMC minutes, a couple of auctions, and Fed Chair Powell speaking from the Jackson Hole Symposium.